The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Wow, we've got some breaking news for you on Squawk Box. I am Steve Sedgwick, that is Juliana Tattlebaum, and these are your headlines. President Trump announcing a 25% tariff on all car imports, sending shares in global automakers, and that includes the US ones, by the way, sharply lower as he escalates his reshaping of global trade.
This is the beginning of Liberation Day in America. We're going to take back just some of the money that has been taken from us.
The European Commission president says the EU will look to negotiate with Trump, but vows to protect its economic interests. As the head of Germany's car industry association brands the levies a fatal signal for free trade.
UK Chancellor Rachel Reeves salvages her fiscal headroom, but the Office for Budget Responsibility warns she's on thin ice as it halves its growth forecast for the year.
I said that our fiscal rules were non-negotiable, and I meant it. I will always deliver economic stability, and I will always put working people first.
We'll be joined by the OBR's David Miles, as well as former Chancellor Philip Hammond this morning. And Ukraine and Russia accuse each other of breaking truce agreements as French President Emmanuel Macron convenes leaders from the Coalition of the Willing in Paris.
Tattlebaum, good morning to you. How are you?
I'm doing well, Steve. What a morning.
Could not be more animated and excited about the news flow. Good or bad, it is incredible news flow at the moment. Look, let me just go back very, very briefly before I get to the latest news, because there is brand new news coming out from the Trump administration. The way that IR works, the way that international relations works, is that the big nations like bilateral because they can pick off the small nations in conversations, i.e. the Chinas, the USs of this world. They can go in and kind of impose themselves in trade negotiations. That's why we have multilateralism, i.e. multilateral trading organisations such as the WTO. They work things out which are fairer potentially for the smaller nations. The big nations don't necessarily like that, but maybe they get the desired result in free trade. So when Donald Trump says, and he's just said this on Truth Social. This is literally, I mean, what the man's still doing up now. His stamina is phenomenal. He says if the European Union works with Canada in order to do economic harm to the USA, in his words, economic harm, they might be saying they're trying to work out a coordinated response, large-scale tariffs, far larger than currently planned, will be placed on them. He adds if the European Union works with Canada in order to do economic harm, that's pretty much the same tariff thing, Flash. They've done it twice. This is extraordinary. So this is on the back, I believe, of Mark Carney, when he got elected Prime Minister last week, coming over. And the first things he did in 4 days, he came over and saw the Europeans and said, look, well, maybe we need to work together on this one as well, i.e. a coordinated response. Now, that's totally logical. If you've got respondents to a trade war trying to work out how they respond to the aggressor, the biggest player, the gorilla in the room, so to speak, why wouldn't they coordinate their response as well? Try and actually work together on this one. Trump and his administration will clearly see that differently. And again, it's not for me to judge, but I'm just saying they will see it differently. But they are saying now, Mr. Trump, on his Truth Social at 1 a.m. stateside, again, your stamina, sir, is phenomenal. If the European Union works with Canada in order to do economic harm to the US, large-scale tariffs, far larger than currently planned, will be placed on them. This is extraordinary.
Well, it is, I mean, to your point about Mark Carney, last week, he made very clear that he doesn't have a lot of options. Yes, you can look to Asia to deepen ties in response to what the U.S. is doing, but Canada doesn't necessarily share the same values as China. He explicitly said that, and he talked about how his first trip as Prime Minister was coming to Europe, but given the shared values and the fact that so much pressure is coming out of the White House, Canada feels like it's been backed into a corner and it has no choice but to strengthen ties with who remain its allies.
Up until about a few weeks ago, I honestly thought Canada and the US were stunningly close allies. I think most of us did. Certainly most Canadians I know did. And I know a lot. President Trump has announced a 25% tariff on all cars made out of the United States. The president said the levy will go into effect on April 2nd and will be collected from April 3rd, with tariffs on auto parts due to come into effect in May. Trump did not outline any exemptions to the tariff, saying they would be permanent for the rest of his term. Close to half of the cars sold in the US last year were imported, according to research firm Global Data. But President Trump says he's confident automakers will adapt.
We'll effectively be charging a 25% tariff, but if you build your car in the United States, there is no tariff. And what that means is a lot of foreign car companies, a lot of companies are going to be in great shape because they've already built their plant, but their plants are underutilized, so they'll be able to expand them inexpensively and quickly. But others will come into our country and build, and they're already looking for sites.
Here's the automakers. It's not that simple, though, is it? How many times do those parts cross the border from Mexico and the US when they're adding bits on and having more value added to the engine eventually so then it can be sold to US consumers? The answer's many, 7 times in some cases.
Well, the other point, too, is that even though we don't know exactly what will be targeted here and to what extent the suppliers will be included, even if we don't see auto parts suppliers included in these tariffs, if we see finished cars included, that's going to have ripple effects on the suppliers because obviously they need to use parts to make the cars. So if we're seeing a reduction in finished cars that are being manufactured, it's going to have an impact on the suppliers as well.
Finland made cars.
Oh, Steve, you're too much this morning.
Finish? No, don't worry. Anyway, the negativity has continued through the Asian session. Lynn joins. Lynn, what do you think? What's going on?
Yeah, hey Steve, it's been a pretty tough day when we look at the auto sector here. I've lost my playback, but from my recollection here, some really steep falls, for Japanese automakers. We've got the transport index, which was the worst performing sector, really dragging down the broad-based topics index as well. If we look at the major here, Toyota, which is the biggest globally by vehicles sold, down by close to 2.7% today. Keeping in mind that for all of these automakers, the US market is their key market, the biggest market, as they have seen sales erosion from the other key market, which is, of course, China. And it's not just the volume here in terms of sales, but also higher margins in terms of the sales stateside as well. We are seeing sort of the biggest falls in some of the smaller automakers. So I'm looking at Subaru, Mazda, as well as Mitsubishi Motor. And a big part of that, according to analysts, is that whilst the US is that key market here, that they haven't onshored as much as some of their peers. So if we take, for example, Subaru, about 70% of their vehicles sold are actually in the US market, but they've only onshored about 30%. That's according to research from Jefferies as well. Nissan, and we heard from the incoming CEO yesterday, Ivan Espinosa, and he's obviously talking about the fact that there are multiple headwinds here and the fact that they are open to partnerships, perhaps more consolidation here, perhaps a resumption of those talks with Honda. We heard from the Prime Minister today, Ishiba-san. He spoke about the fact that all options are on the table. So we'll have to see sort of what comes of that. So far, though, we know that they have tried and any kind of exemption or carve-out has not been forthcoming, guys.
Lynn, thank you for breaking down the reaction there. Now, Germany's Car Industry Association has described President Trump's planned tariffs as a, quote, fatal signal for free trade, calling for talks between the EU and U.S. Data firm Jado Dynamics shows Germany's 3 largest automakers make up around 73% of EU exports to the U.S. Annetta now joins us with more on what these new tariffs mean for the German auto industry.
Of course, it's a blow to the German auto industry, especially at the moment in time when they anyway struggle with profitability and sales, especially in China. So let me bring you up to date with the stats. So literally every 3rd Porsche and every 6th BMW was sold in the United States in 2024. With VW, Volkswagen, Audi and Mercedes, the share is actually ranging between 12 and 15% of their total sales. We had a study some weeks ago from Barclays where they were saying that actually 10% tariffs would chop off roughly, I think, 8% of net profit at Volkswagen. And then we can do actually the math, what it actually means for car makers. So they're differently positioned, those German car makers. VW has a big production site in the States, in Chattanooga. Audi and Porsche are the worst positioned because they don't have anything in the States. They have to import everything into the United States. And of course, they will be badly hit. Especially Audi will be terribly hit, given that they anyway have a lot of problems currently. And of course, BMW also is producing in the States. So it remains to be seen. I think before his first term, President Trump was actually threatening the industry with those tariffs, but never did follow up on it. They did a lot of backroom political horse trading and lobbying to prevent those tariffs kicking in. And it remains to be seen what the car makers are doing now, because clearly there also is a bit of a negotiation chip when it comes to tariffs from the European Union, because currently, it's interesting, currently it's only 1% tariffs bringing cars in the States, but cars from the States are actually levied by 10% in Europe. So I guess it's only a starting point, but of course it's a blow to the profitability of those car makers.
Annette, thanks for breaking it down. We'll see how those German automakers trade this morning. Now, European Commission President Ursula von der Leyen said she regrets the U.S. decision to impose tariffs, saying the bloc would, quote, seek negotiated solutions while safeguarding its economic interests. For more on Trump's tariff announcement, head to CNBC.com.
Copper prices hit a record high in the US overnight following a Bloomberg report that the president could impose, yeah, you guessed it, import tariffs on the metal within the coming weeks rather than later this year. Copper is already more than 30% higher this year. Wow. Even outpacing gold as investors look to stockpile. A lot of things are happening ahead of April 2nd. People are just not taking chances. That's why those durable goods figures were so interesting yesterday, but we'll come to that later. Anyway, this after Trump signed an executive order in February calling for a probe into the potential risks of importing it.
Coming up on Squawk Box, the UK's Office for Budget Responsibility slashes the country's forecast in half as the markets gauge the impact from Rachel Reeves' spring statement. Plus, truce troubles as Ukraine and Russia accuse each other of violating their ceasefire agreement. We'll bring you the latest. And Karen will be with us from the IIF European Summit in Brussels this morning with an array of guests. We'll hear from IIF CEO Tim Adams this hour and the National Bank of Belgium Governor Pierre Wunsch at 7 o'clock GMT. Welcome back to Squawk Box. Well, we're tracking all of the fallout from President Trump's announcement late yesterday on these 25% tariffs coming on the auto sector. Let's take a look at how some of the key automakers in U.S. Trade are faring. This is the extended hours trade for Ford, GM, and Tesla. We're seeing a pullback across all three of these names, including Tesla, which obviously stands to benefit relative to the foreign automakers here. But Tesla has come out, the CEO, Elon Musk, obviously we're familiar, he came out just overnight saying that, to be clear, this will affect the price of parts in Tesla cars that come from other countries. The cost impact is not trivial. He also said it's important to note that Tesla is not unscathed here. The tariff impact on Tesla is significant. Now, the irony, of course, he's right there in the center of the Trump administration. So the fact that this just highlights the conflict of interest here, that he is both within the Trump administration,
to Starlink and
informally,
SpaceX. No, I think the problem for Musk is on both sides. Whereas for everyone else, you've just got the problem of the tariffs, which is huge, and it's terrible for the automakers in Germany, especially. I mean, it's a disaster for many of them. It's a fatal blow, as the auto industry said. But for Musk, you've got the double whammy that he is associated with the policy in the eyes of the consumers. And many of those consumers bought cars before they bought the bumper sticker saying, I bought this before Elon went blah, blah, blah. Many of those purchasers are pretty progressive. They're pretty liberal. They're pretty kind of green. And a lot of things that, dare I say it, parts of the administration are not. So he's got the double whammy. He's got the image problem being associated with the architect of these policies. Yeah. Or some people say he is the architect of some of these policies. Yeah. And as we said, it's going to hurt them on both sides.
You mentioned the consumer, and I was thinking about the consumer in a different context on the back of this news, that the consumer in the U.S. is under extreme stress. We've seen it in extreme stress when it comes to their outlook. We've seen it in the confidence surveys time and time again over the last couple of months. And these tariffs have the potential to add significant cost to the consumer right now. Wedbush was out overnight saying that this hurricane-like headwind for foreign and many U.S. automakers could push the average price of cars up $5,000 to $10,000, depending on the make, model, and price point. So if you've got U.S. consumers already nervous about inflation, if they're now looking at the price of their cars going up significantly, surely this is going to have a knock-on impact on the U.S. economy more broadly.
The Conference Board's consumer index yesterday, this is before we've had a tariff, the Conference Board consumer confidence index sank to its lowest level in over 4 years in March yesterday. 92.9 in Feb versus the upwardly revised, 92.9 versus the upwardly revised previous figure of 100.1, marking the fourth consecutive decline, the longest streak since 2012, the steepest 1 month decline since August 2021. This isn't me, a European. This isn't me, someone who's trying to be subjective about Trump policies. This is data saying the US consumer and consumer confidence is plummeting.
Exactly, and this is the concern, and so now we're seeing these concerns actually come to life and materialize with the tariffs coming through. Let's take a look at U.S. markets yesterday. We had the anticipation of this announcement weighing on sentiment yesterday. The announcement was well telegraphed, and as you see here, we saw a sell-off in the NASDAQ in particular. It dropped about 2%. The S&P also dropped by about 1%. 6 out of 11 sectors in there were losers on the day. Tech was the biggest loser, 2.5% down. Consumer staples, interestingly, was the outperformer. And I say that because typically consumer staples do well when investors are feeling more defensive. That sector was up about 1.4%. Looking at the tech sector in a little bit more detail, here's some of the big action. You saw Nvidia shares drop about 5.7%. Tesla dropped nearly 6% as well. Alphabet and Meta also moving lower in yesterday's trade. Overnight in Asia, we're keeping a close eye on Korean and Japanese markets given their overexposure to the auto sector. The Kospi down 1.5% and the Nikkei 225 down about 0.8%, so underperforming the Hong Kong and China markets. Let's get to European futures. What are the opening calls telling us? Well, right now we're looking at a 0.8% pullback in the Xetra DAX, fairly contained given some of the language being used around the impact for the German auto sector. The FTSE 100 down about 0.3%, and the Stoxx 50 looking to open lower overall as well.
Spent a lot of my time yesterday in Westminster and the rest of my time listening to Rachel Reeves from a third part location. It was a bit, I don't know, it was unsatisfactory. See what you think. UK Chancellor Rachel Reeves gave her first spring statement Wednesday announcing a raft of cuts in order to restore her fiscal margin after public finances deteriorated by nearly £15 billion. Those measures are expected to push 250,000 people into relative poverty. Now that's according to government figures. The Office for Budget Responsibility also sounded a sombre note, halving its growth outlook for the economy for this year, albeit, reckoning it will expand by only 1% this year, though it did raise, and this is an interesting point as well, it raised forecasts for the rest of the decade. Reeves set out the details of that fiscal headroom in her statement.
The OBR's forecast shows that before the steps that I will take in this statement, the current budget would have been in deficit by £4.1 billion in 2029-30, having been in surplus by £9.9 billion in the autumn, as the UK, alongside our international peers like France and Germany, has seen the cost of borrowing rise during this period of heightened uncertainty in global markets. As a result of the steps that I am taking today, I can confirm that I have restored in full our headroom against the stability rule.
As a lot of commentators pointed out, this is wafer thin margins, and the fact of the matter is, even today's announcement from Trump could blow everything out the water. Gilt yields were really steady, though, albeit at elevated yields of 4.714 for the 10-year paper. Again, the pound, what was it, 129 roughly, give or take the change? There we go, 129.23. So actually rallying versus the greenback. But the Office of Budget Responsibility warned Rachel Reeves that even relatively small fluctuations, this is what I'm trying to say as well, in gilt yields and the bank rate could bring her back to square one, putting the probability of keeping to her fiscal rules around 50-50. That's even before taking into account the impact of potential tariffs. Now, if the US were to impose a blanket 20% reciprocal levy, it would almost entirely eliminate that fiscal headroom. And we're talking about a couple of billion quid here of fiscal headroom compared to an economy which is over $1 trillion. You know, these are small numbers of leeway. The Institute for Fiscal Studies Director Paul Johnson said Reeves's measures have left her at the mercy of events, saying speculation over autumn tax hikes will be rife. They'll be rife for 6 months. This with taxes already on track to reach their highest proportion of GDP in the UK ever, hitting just under 38% by 2028. We've got some great guests, as ever, to discuss this. Politics, the economics, later on the show. Don't miss our conversations with the OBR's David Miles, 8:15, and as well as the former Chancellor of the Exchequer, Philip Hammond, at 8:30. In the meantime, Ludovic Subran is Chief Economist and Chief Investment Officer at Allianz, and he's got amazing things to say out of Munich, which I would guess... Good morning, my great friend. Out of all the cities in Europe, Munich is one of them, must just be having its head collectively in its hands this morning, because it means a lot, of course, to the likes of BMW and others.
Yeah, this announcement on cars is, I would say, expected, right? Cars are so political. But it's true that it comes already at a 20%, level when the reciprocal tariffs are coming next week. And, it's all about additivity of these tariffs. So you've seen the reaction of the stock markets and most of the car manufacturers. I think it comes at a time when there is a lot of uncertainty also on car consumption. So registration of cars has slumped a bit since the beginning of the year. So it is really a bit of another of these major seismic waves of the Trump administration, and starting with what matters the most, cars and reviving the Rust Belt.
Ludovic, good morning. It's great to see you.
Good morning.
I was, you don't often come across economists who see the value in Trump's tariff policies. But overnight, I read some research from the chief U.S. economist at Brevin Howard, who says that this tactic from the U.S. to go after Europe was actually fair, that for Europe, there's a clear case for taking action given the VAT policies here. And this is not about tariff versus tariff, but it's actually about the way the Europeans subsidize their own automakers. Do you think that there's a point there around the way that Europe uses VAT?
This has been I've heard this argument for quite some time because, in the US, there is a sales tax. And in Europe, there is this VAT. And if you're local manufacturers, you can actually get VAT reimbursed by the tax office. So it's been on for quite some time. I think this is really about also, we're talking about people that are, you mentioned Brevin Howard, these are hedge funds, right? So these are the people that are also advising President Trump as we speak, right? Stephen Mira and Scott Best, and these are very contrarian people. So let's not think all the economists think this way. It's a bit of a contrarian, very dramatic way of thinking about things. But it's very interesting because this is at the heart of the whole idea of the dollar being too high. It's the idea that the whole system is a free rider on the dollar, including the fact that Europe, among many other countries, also have VAT, which, by the way, were just put in place to make sure we have finances. You mentioned the headroom in the UK, So this idea that VAT was geared towards a form of advantage and competitiveness on other countries, I think, is wrong. But let's take that for a minute. In that case, I think there are other things that the US should do to make sure that they propel their own industry, just like subsidies. That's what President Biden tried to do. But putting tariff is going to hurt the American consumer. It's going to hurt certainly the turnover of the car manufacturers in Europe, but it's going to hurt the American consumer first. So I don't think that actually makes sense. Let's put it this way.
Well, Ludovic, you went exactly where I was going to take you next, to the U.S. consumer. Steve and I were just talking about how consumer confidence has been falling in the U.S., but so far that shaken confidence hasn't translated to the hard data yet. How strong is the link between consumer confidence and consumer spending? In other words, is it inevitable that we are going to see this translate into a real economic hit?
Look, some of the numbers, especially your Michigan numbers and so forth, show the lowest ever sentiment in the U.S. consumer in the past 25 years or something. So we expect the U.S. to be stalling in the first half. So we don't expect a proper recession, but zero growth for the first half of 2025 is actually quite worrying, I would say, for the US economy as a whole, right? We have barely 1.5% growth for the US this year. And as you can see, the market's already correcting very strongly. So I think the downside risks are higher than the basically upside surprises, at least for this year. The consumer is everything for the US, right? And so we don't see precautionary savings, but you can imagine the first bite for the US consumer today is wealth effects. And nobody's talking about that because everybody's talking about the inflation coming up. And yes, there could be inflation as high as 4% in the US in the coming months, right? So that's going to endanger what the Fed can do and certainly jeopardize the cuts. That's why we think the Fed is going to be done at 4%. But the wealth effect is more important right now. Think about all those people that have had stocks plummet under their own eye, and that is completely, indenting their purchasing power, and also having negative wealth effect, and so endangering their projection to the future. So that's going to hurt the car market. That's going to hurt the housing market. That's also going to hurt certainly the durable goods, which is also where we see the U.S. consumer faltering.
I've got time for one more question, sir. You're also the CIO over at Allianz. Where's the best place for our viewers, your clients, to park their money amidst this storm?
Look, if I just look at the flows of the past 2 weeks, I would say Europe looks not too shabby. I would like to say the UK also. I think you mentioned the pound appreciating. It's very interesting to see these reversing flows from the US to here. It's certainly because also the euro has been a bit cheaper and the pound was a bit cheaper for a relative time, also because of the differential of interest rates. But it's quite interesting to see that some of the long-term measures we're taking in this continent, the old continent, is working compared to many maybe disruptive policy path that are unclear about outcomes in the US, right? So it's very interesting. It's the 5 stages of grief, right? There was a form of denial, and it was like, it's okay. Trump's going to be good for business. And now people are looking back at old, woke, green Europe and saying, oh, these guys are not too bad. So I would say Europe, of course. We're a very large European insurance investor, as you can imagine. So I think we're after a good thing here when it comes to competitiveness, innovation, green, and certainly transforming the economy in a globalized, open, and certainly also a constructive way.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.